Welcome to Money Convos, where we discuss personal finance and investment tips. We're committed to helping people create wealth and achieve financial freedom. Follow us on Twitter, Instagram, Clubhouse, and Facebook, and subscribe to our YouTube and podcast. All right then, let's head into today's conversation.
Hello, good evening, everyone. I hope you're all doing well. Welcome back to another week of Money Convos. Thank you for making the time to join us today. I'm seeing some new faces, or are they old faces? I've seen these faces before. Jerome, Thea, and Dennis, our chief producer, as usual. And today we have a special guest in our midst. He's new to Money Convos. I'll be introducing him soon. Dennis, please come up stage if you can, and so that we can run this thing. We have a very big man here. I can't do it all on my own. Anyway, Papa Sam, welcome to today's conversation.
Hi, Elikem. Can you confirm if you can hear me?
Yes, loud and clear.
Great.
Wonderful. Okay, great. So today we have Papa Sam joining us, and the title you can see is Meet Papa Sam, a money manager. I met Papa Sam 2 weeks ago. About 2 weeks ago at the CFA Society Ghana event, and we chatted briefly. But Mimi has told me a lot about Papa Sam in the background, and we are honored to have him in our midst. Papa Sam has some thoughts on economic issues and perspectives that I believe would be good for our audience. So we're looking to bring him on board and have conversations related to, economics and stuff. So per our flyer, you can see that Papa Sam is a portfolio manager. That means he manages investments. Understand? It's a big man. And then also he's an economist, and he writes articles, or he's a columnist in regular dailies in Ghana. So it's an honor to have you here, Papa Sam. I don't think I've done justice to the About You section, but if you don't mind, just tell us a bit of a brief about yourself before we get more into your background. Okay.
Thank you, Elikem. I think you've done. Generally, you said pretty much it. I'm a portfolio. I lead the investment, portfolio management, and research and insights desk at Fidelity Securities Limited. It's an asset management firm which is a subsidiary of Fidelity Bank Ghana Limited. Essentially, I'm in charge of the portfolio construction and asset allocation or capital allocation for customers. Retail customers, individual customers, high net worth individuals we manage under our wealth management, I'll say units, pension funds. So I also.
What did you do for undergrad? What do you do? Land economy?
No, building technology.
Building technology. Then you did a master's in something else before you came to do an MBA on top.
Yeah.
So you just didn't want to mind your own business. You want to they admit that we went to learn. No?
When he started talking about the fact that when he realized the lab was not his, and I could kind of relate that at the beginning, I don't know, when I started off working, I don't know why my interest peaked in finance. So I started reading or that's what also led me to go and take the stock exchange course and all that. But then I still found, after I did my professional exam, then I just don't know. I just thought that, okay, I think now I found my feet in my career, but I was still interested in finance issues. So that's why I just keep doing it on the side as these are our discussions and all of that. So that's
Okay. That's good. Speaking of pivoting, right? I think at this point it would be good for any young person who is listening, or even any older person. Well, definitely young people, considering our audience, is you could always pivot to do something else. It's all about if you want to put in the effort. All my life, I wanted to be a lawyer. Then, back in the day when law was only in Lagos on a second degree, buying tech at first, I didn't get into tech, and then I didn't know anything about administration, but years later, look at me now, wealth manager and all those things. High school, I did what? French literature, French literature, Christian religious studies, and government. Meanwhile, people were cracking their heads over e-maths and things, and we all ended up in the same place. Then even at the university level, many people were doing accounting, working their behinds off to try to get it done. And then somebody will go and do, not looking down on any program, okay? Not looking down on any program, but somebody will go and do English or some social science program and then go and write ACC or ICE and now they're all at the same level, right? Just got me think like while I was in uni, I knew that the program I was doing was too general, too broad, that I was at risk of not having a job, so it gave me extra incentive. So yeah, you no matter what stage you are, you can always pivot as long as you are willing to put in that work. So yeah, we've got Papa Sam back, and what we would do is we'll keep the questions general so that if we lose you again, the rest of us can answer these questions and still keep our audience informed. And we really appreciate our audience for hanging in here despite these technical challenges. Okay, so Papa Sam, do we have you?
Yeah, I'm back.
Okay.
I think it'll be better now.
Okay, all right, great. So you were saying something. We were talking about how you did a pivot. You did chemistry for bachelor's, and you realized the lab wasn't for you. Could you pick up from there?
Okay, yes. So I as I was saying, I think very early in my degree in chemistry, I realized that the lab was not. I for some reason I hated going to the lab, and my understanding was that in chemistry that would be like a place I'll work for most of the time if I was going to like build a career in chemistry going forward. So I just knew it. But as I was doing my degree, I felt, as I said, there was a very strong interest in how the world worked. A lot of questions ran through my mind. Why Africa is poor? Why Europeans are rich? I knew that intrinsically there was no difference between me as an African with the black skin and a European. I don't think in terms of intellect, IQ, or anything, there was a difference. So the question was, how was the world working? And I guess I felt economics gave me a better insight into some of these questions, having interest in economics will sort of give me a bit more insight into some of these questions that baffled my mind. So I think I had an opportunity to do a course that was like an outside. I think in KNUST you are able to do some courses outside the normal chemistry courses, and I actually wanted to do law. I mean, I think I stumbled on the chemistry. I actually wanted to do some law, so I chose to do law. However, for some reason, the lecturer who was supposed to take the law, I think it was the law of contracts for non-law students who wanted to do some part of their course, an additional course in law. He died or something of that sort. So that year we were not allowed to do that course. So then I went into economics, and as they say, the rest is history. So yeah, I mean, economics. Through economics, I try to find, how the world works. That's how I was saying. Money comes into mind, how money works, and then if you do a bit more research about money and how money works, you end up in banking or investment banking. Actually, investment banking. So that's sort of the progression into that. So as soon as I left the university, even whilst I was doing my chemistry, I started when I went on vacation. My intentions were not in any companies that I had to use my knowledge in chemistry. I started working do my internships in financial institutions, in banks. And so, it progressed there. I started my career in, can you confirm if I'm still here?
Yeah.
Okay. Yeah. That's better. So I started my career, I started my career in training. I was trained in, I'll call responsible banking, ethical and sustainable banking. It was, the training was a 6-month training, by a German financial consulting company called IPC. I did that as a prerequisite to work in a Pro Credit. There was a savings and loans called Pro Credit Savings and Loans, which was German owned. So that's where my career began. So I was trained in responsible banking for SMEs, and then Pro Credit was bought by Fidelity Bank, and that's when I transitioned into commercial and retail banking, if I can put it that way, the mainstream banking parts. And then gradually, since I still had a lot of questions, and working in retail banking didn't answer a lot of the questions, I sort of looked at investment banking as a place where maybe I can understand money more, how money works. And so I transitioned into investment banking, started as a relationship manager in investment banking. And as I think, I don't know if it was picked up, I transitioned from relationship management into becoming a proper portfolio manager and investment manager. So that's essentially the trajectory.
That's interesting. Lots of moves that made a lot of sense. I'm glad you were able to follow that path, and we are here with you, and we are going to come learn from you. So with your interest in following following economics and banking and how money moves around, right? On a personal finance level, what are some of the things that you wish people knew about money?
I mean, 3 things let me say 4 things that come to mind. 1, all money is debt. If you're afraid of debt, you cannot be rich. All money is debt. So, as I went through my career, I'm sure people have their own personal experiences with debt and seeing people in debt, and how probably their dignity takes a beating when you're owing somebody. But generally, debt is in many forms. So let me just stick to that. All money is debt. It is because the government has a deficit. That's how come each and every one of us has money. If the government does not run a deficit, there will be a shortage of money in the economy. So the government has to have a deficit for us to have a surplus, and that's essentially government debt. The banks, if the government does not run a deficit, then it means the banks must give loans. And for a deposit to be created in the bank, essentially, if you understand accounting, for a deposit to be created in the bank, essentially, there has to be an asset. So if you walk into a bank and you are taking the loan, on the bank side, as soon as the loan is disbursed, the bank considers the loan they've given to you as an asset to them. It means that you owe them, so it's an asset to them and it's a liability to you. However, the banks will always disburse the loans they're giving you in their own account. I meant to see a bank that will give you a loan when you don't have an account with them. So as soon as the bank disburses the loan into your account, that's a deposit essentially. So a deposit has been created because of the loan, and that's money that you probably spend and use for somebody to get. So for somebody to get that money, you have to borrow. So all money that we have is a debt essentially. So let me put it that way. 2, there's a difference between and sometimes we confuse. There's a difference between the one who issues the currency and the one who uses the currency. So the way an individual, all of us, me, you, other business in the economy, see money or see money to be as an asset, as a resource, is different from the one who issues the currency, and that's the government. To the government, money is not a resource; it's a tool to fashion the economy. It's not a resource to them. At least their money, the money they issue, not other people, other economists' money, but their money is not a resource to them. It's a tool. But for us, it's a resource to us. I think when you engage a lot of people do not understand the difference between the currency issue and what money means to the one who issues the currency and what money means to we that we use the currency. It's totally different. I think the third thing is let me talk about Bitcoin before I come to the final. I think the final one will be more relatable. Bitcoin is not money. It's not money. For money to have, for my economics training, for something to be money, it means there needs to be three characteristics. It must be needed for transactions. It must be needed for liquidity, and it must be needed for what do you call these people? Speculation. People speculate on it. Bitcoin has that characteristic. There's a lot of speculation on it. However, its transaction per minute numbers are very, very low. Very, very low. So it's not something that is used for a lot of transactions, especially because of its volatility. That's one. It's some people use it for transaction, but in terms of if you compare it to general currency, general money, no. And then people don't hold. I don't think people hold Bitcoin for liquidity purposes. I doubt that. I not as much. So, and for something for anything to be accepted as a legal, as a tender, generally accepted as a tender, it must be something that is required to be used to pay taxes. This is a long conversation, but it must be required to be used to pay taxes. If nobody will accept Bitcoin as a payment for taxes or government levies, it cannot function as money. So I just wanted to bring this up because Bitcoin is like a big thing. Recently, the Bitcoin ETF has been approved by the SEC of US. So bringing it up, and then finally, something that's more relatable. Money goes through a process. For many of us, I'll hazard and say for 95% of people living on Earth, we will not make. Let me use 99%. We will not make money in a quick way. We are not going to make millions in a quick way. Money goes through a process to grow. And it is something that I realized that a lot of young people do not realize early. So in our younger days, we are always looking as to how some small money can grow big. It is the reason why betting is a big, soccer sports betting is a big thing among young people. But as we grow, we realize that we have wasted a lot of our years trying to make millions in a quick period, whereas money goes through a process. So to be financially independent and to be I'll say wealthy or okay in the future, you have to put money down in bits and pieces, and it takes time. That is something that a lot of people realize later in their life, and they don't have a lot of working time or a lot of years as strong people to be able to sort of recover the lost years of trying to make a million CDs or whatever CDs in a quick way by going to a lot of schemes and losing a lot of the money. So these are the 4 things I wish people understood about money.
That's interesting. A few of these are quite controversial and would be raising eyebrows. I think just a quick recap. One was about you saying all money is debt. 2, the difference between the issuer and the user of currency. 3 is on cryptocurrency not being money. And the last one is money takes time to grow. No get rich quick schemes in here. Okay, that's interesting. And the last point, I think that's something that we've been preaching a lot on Money Convos. And when it even comes to the market and equities, we refer to this saying, forgotten who exactly said it, but it's when it comes to markets, it's best to spend time in markets, not to time the market, right? You think you can get in, get out, and you'll be profitable, but no, the best thing to do is just hang in there, stay in, and let your money grow over time. All right, great. All right, so let's see. Another thing that I would like your take on is last week we had a conversation about what investment should people look forward to this year, or what investments should people consider this year. So what types of investments are you considering for this year?
Okay, so yeah, so the disclaimer is I'm going to talk about what as your final line of your question says, what I will do as an investment advisor generally, or a risk manager. to be able to even advise anybody on what investments to look at, I need to understand a lot of things, their appetites, their whatever they want to use their money for. So I can only speak on knowing my risk appetite and and my horizon and what I want to do in the future, what I will look at for myself. I think I have purpose that one thing that is new for me is that I'm going to take a forex position as a forex, or I'm going to invest in holding a forex or another currency in long term. So it's not that I'm going to buy let's say let me use USD. I'm going to buy USD, and when the rate is high, I'll sell it and buy it again. No, I'm as part of the investments I'm going to do, or the assets that I want to hold, I want to generally hold some forex as a long-term asset. I work in Ghana. I'm paid in cedi, so when I'm paid or when I'm trying to save, I convert some of my savings into USD, and I'm holding it. You can hold it as USD in itself to protect your value, because generally, if you look at the long-term value since 2007, the cedi depreciates on an average between 10 to 15% a year. So that means that if I have some of my assets in USD, I'm automatically saving myself on 10 to 15% loss in value over a period of time. So that is it. You can also decide. I'm looking at also how to earn something small on the USD as the USD position that I want to take. So I'm looking at opportunities to invest in things, hard currency USD assets. Currently on our market, there's a gold ETF that tracks the gold. I think it allows you to when you invest you convert your money into USD, and so it saves you from the currency issues. It's something, or you can just keep it in USD as a long-term asset. So if you are looking to save money for a long term, maybe consider, apart from doing some local investment, consider the saving in another currency. Another thing this year I will say is I perceive that the stock market will do well again. I think that maybe this year the stocks that will drive the market will be the financial stocks. They have driven the market for most of in the past, because of the issues, the fallout from the domestic debt exchange. The last year, most of them returned negative last year. I think that as the economy starts to recover slowly, and the government shows faith in paying paying the coupons on the new bonds they have, generally investors will be confident in the stock market and in banks and start to take positions there. So I think if you are somebody who does investments on the stock market, look at holding some bank stocks in the long term. Generally, banks have proven to pay dividends. I know that maybe that will be difficult in this year or probably next year, but I'll advise bank stocks. And then generally, I think MTN is a good stock. Fundamentally, it's a very good company. Its cash flows are like superb. And so it's a company people can look at on the stock market to hold long-term positions. And I will if you have a bit of an appetite for risk, slight risk, and you have time. It's essentially, if you have time to spare, I will take some positions in some of the new bonds that the governments have exchanged. They are trading at 58 cents to $1. So if somebody is holding 100 cedis of that bond, you buy it at half its price, around 58 cedis to the dollar. So whilst those who are currently in it will have to deal with the mark-to-market losses, new investors or people who have new monies can take advantage of that and hold those bonds at a discount. If you ask me, I'll probably exit a year before the bonds are reach maturity. But these are what I'm looking at: investing, holding some long-term USD assets the stock market. I'm looking at the banks, some of the bank stocks, and MTN, I'll say. And then if you have time and you can take a bit of a small risk, you can look at buying some of the new government bonds at the discounts they are trading currently. So I mean that's what I'll say for now.
Okay, that's interesting. So the new government bonds, equities, some foreign positions, and you even mentioned gold for the exposure to forex. Yeah, that's interesting. And just to re-echo the disclaimer, this is no investment advice. These are just some options to consider. You should, for your own independent assessment of what you should do, you should consult a financial advisor. And at this point, I'd encourage you to get on Instagram and follow at investment friend on Instagram. At Money Convos, we speak generally, but at Investment Friend, you have some targeted coaching to help you towards your own goals. And there are many things that are going on, exciting things there. I would have announced something, but I think today is even the deadline for joining the Money Movers Club on Investment Friend. So I encourage you, run to Instagram, go check out what the Money Movers Club is all about over there, and see if it's something that you're interested in joining. Yeah. Anyway, so bringing it back to Papa Sam. So in your profession, I'm sure there's a lot you do to catch up on the news. Are there any resources you would recommend for the average person who is thinking about money? Are there any books or news channels that you would encourage people to pay attention to build up on their knowledge about finance and investments?
So I mean, for some of these, those I follow can be a bit technical. So for I built my knowledge before I entered this career about money through. I'm not a big reader personally, but I like to watch. I like to get a lot of information via like videos. So I found out very late in my educational journey how resourceful YouTube is in terms of education. So I think YouTube can be a good place. There are a lot of, I would say, maybe if there's any concept you hear about that you want to understand, just YouTube it and name the concept and say for dummies or explained, and watch like 2, 3, 4 videos. I'm sure you'll be fine. So that's essentially what I'll say. Money Convos is a one place. It's one place. I mean, it's one place to join. We here. I'm new here, but I guess we discuss concepts and break down things very, very easily for people who want to understand money a bit, understand what is going on, to understand it, and then be able to engage whoever is their financial advisor more on their options. So I think this is also a place to look at. The other place the other research are a bit technical. I mean, so for somebody who is just entering trying to understand money, it will be a lot of the things in Bloomberg or in the FT will can fly over their heads. So I think as you follow the news, as you follow conversations, if there's any concept you hear, Google, YouTube is a friend, is a friend. Put it in there. For dummies, explain it, and you get a few videos about it, and I'm sure you'll be fine. So those are what I can say for now.
Okay, that's great. So for those who love YouTube, it's a good resource that Papa Sam recommends. And there's also Money Convos. So we'll take the plug. As it has been delivered. So follow us here on Twitter or X, and follow us on Facebook, YouTube, on Instagram. You can always play back our episodes on YouTube, and wherever you listen to podcasts, just search for Money Convos. All right. And don't forget to also follow Investment Friend on Instagram. Great. And speaking of the context, the certain concepts that people don't understand, just drop something in our DMs anywhere. If any concept you don't understand, and we can have an episode where we talk about these concepts that people don't get. So just send them our way so that we know that that's what a lot of people want to talk about. So we'll also talk about it. Great. Okay. So
Elikem,
yeah.
just let me just add one. There's also like so for people who are in the industry who want to to understand more. There's this podcast, Masters of Business. It's a Bloomberg podcast that I recommend people listen to. They talk to business leaders in all sorts of areas. I think it's something that and I know Money Convos also have a podcast, so yes. But Masters of Business is a place for people who understand the technicals a bit, but want more information. They want to know more about the industry. So you can try that too.
Okay. That's great. That's great to know. So many resources for us to get to. Speaking of resources too, we noticed you've written a couple of columns, and on your LinkedIn say something about alternative economics for Africa. Would you like to shed some light on that?
Interesting. Yes. So yeah. So I, as I was explaining how I sort of transitioned from the sciences into retail banking and into investment banking, from chemistry to economics. I've always, as I said, there's been a lot of questions on my mind. A lot of things have baffled my mind about why, a lot of questions that I wanted answers. Why Africa is where it is, why we are unable to develop or meet our development goals as we want our aspirations and all that. So I remember when I was doing my postgrad degree or my MSc in economics, there was a lecturer who entered the class and wrote on the board. The first thing she wrote on board is why his question was why some nations are poor and others rich. He puts into this, and the essence was that by the time we go through the course, we will understand why some nations are rich and others are poor. I'll disappoint you after the course. I still didn't get answers to the question why some nations are rich and some nations are poor. I was even more confused. However,
I think that's part of why Ghana was so poor then.
Yes. So I think I saw an article on seigniorage. So seigniorage is just to explain, seigniorage is a loss or a gain. A loss or a gain when you print. So for example, if we are printing a 1 cedi coin, the government wants to print a coin or make the coin and so that it can be circulated in the economy. How much does the government spend to print one coin? If the government spends more than one, let's say a 1 cedi coin, more than 1 cedi to print a 1 cedi coin, and the government has made what we call a seigniorage loss. If the government spends less than 1 cedi to make a 1 cedi coin, then it's a seigniorage gain. So I saw that, and when I read it, it explained I immediately understood why for developed nations their pennies look like cheap metal, whereas Ghana, we print a 1 cedi coin with a bit of silver, a bit of gold. It's so thick and heavy. And I understood why they will probably spend very little to print a penny, because of course the government wants to make seigniorage gain. So in going through that rabbit hole, trying to read what seigniorage meant, it brought me to an economic theory called modern monetary theory. And having gone through, tried to read about it, it has actually explained a lot of the questions that had boggled my mind. Why we are where we are, why Ghana has persistently high interest rates. Like every single economic question that has boggled my mind has been answered since 2019 to me. So that is, and when I got that, when I started to read that and watch a lot of videos and watch a lot of debates, so not only debates between those who that theory and other mainstream theories, I was overcome by a lot of information. And I was hoping to share it in some way, maybe through like starting a YouTube channel. It didn't see the light of day. So that's thing you saw on my LinkedIn page, alternative economics for Africa, was something I was trying out maybe like a couple of years ago to create a YouTube page to sort of share some of the insights that I've gained. But it has not, time, and I guess it was not for me. Being a YouTuber is not for me. So that is it. But I've tried to share it in some of my articles that I have written. I think I've written about 2 articles. I've tried to share it, and sometimes my Twitter posts. If you go through my Twitter, my tweets, sometimes once in a while I tweet things that may seem generally as controversial or as different to how the mainstream think about things. But for me, going through it has answered a lot of questions. That's the only thing that I've gone through that has answered a lot of the questions: why we are poor, why our interest rates are so high, why we keep going to the IMF apart from the corruption and things, structurally, why we keep going to the IMF generally average every 4 years, why we are unable to come out of our raw material export dependency, why we are not able to industrialize. It has explained all that. Hopefully, as time goes on, I'll make time for my very busy schedule to write more and or tweet more about some of these things, and then maybe hopefully I have some engagements and I can engage on them more. So that is where what you saw comes from.
Okay, great. Then that's good. We would always love to hear your thoughts on some of these things. Just picking up on a few things that you've said today, I can see that some would be quite contrary to what is common knowledge about money. So we are looking forward to get more ideas from you, and we hope to have you join us in more sessions in the future. So yeah, is there any thoughts that you would like to share? Any last words that you'd like to share with our audience before we call it a day and meet again next week?
Last words. What I say? Generally, okay. So let me say this. I think we need to, as and this is as citizens, we need to be more engaged in our country. If we are unable to actively participate in any civil engagements, if we do not have time, figure a way to take advantage of this, to make money for yourself and escape the hardships of the system, if I'm putting in the right words. But there's a certain extent to which we can do that. Generally, we all come out of the university. For every batch of university students who come out, there's so much hope that we are going to make it in the world, but very, very few of us make it. And so for us, that may be thriving or surviving in this economy. It's important that this is a personal thing. It's important that we are engaged in how to make our economy and the country better for others who may not have the opportunities as we have it. Generally, I don't think I am special. I don't think I won't say I'm a special person, or I have an above average IQ. I won't consider myself that. I think wherever I am today is a combination of opportunities that I had, and yes, even the decisions I made, maybe opportunities I had from my upbringing and so on and so forth. Some people may not have had that opportunity, or may not have it, and so it's important that as we are negotiating the economy in our lives, we think about the rest of the people. So whichever little way we can contribute to whatever offers those who are trying to push for better for all of us as a collective, we can. I think it's something that I will encourage many of us to find ways to be a part of. Thank you for having me.
Wonderful.
It was great talking to you guys.
Yeah, thank you for sharing your perspectives and the the words of encouragement to all of us. We need to participate in the affairs of our country if we want it to get better. Okay, great. All right, Papa Sam, thank you for making the time. Thank you all for joining in today to listen to us. We hope to catch you sometime next week. I'm preempting the team, but I can imagine next week we'll be talking about Val's Day. So hopefully, we hope people can join in, chip in to that conversation so that we make sure that we are well prepared. So that if you have plans to score points, you score maximum points without breaking bank. You understand? Okay, guys, enjoy the rest of your week. Do take care and do follow us on Instagram, Facebook, Twitter, YouTube, wherever you listen to your podcast, and also follow Investments Friend on Instagram. Thank you and goodbye.
Thank you for taking the time to listen to our thoughts. I hope you learned a thing or two and start practicing. Don't forget to follow us on Twitter, Instagram, Clubhouse, and Facebook. And subscribe to our YouTube and podcast. Do tell a friend about Money Convos so we all become wealthy together. Talk to you soon. Bye.